RJ Baxter, Fairway Independent Mortgage with your tip of the week. This week I wanted to give you guys a primer on the Fed meeting that's coming up this week, because it's been widely speculated and actually telegraphed by the Fed that they're likely to cut rates at this next meeting for the first time in quite some time. The last time they cut rates was after the Great Recession, when they systematically cut rates down to 0% and it stayed there for quite some time. And since then, they've raised rates actually over the past couple years. And I'm getting the question a lot right now: should I wait to lock my rate? Is my mortgage rate going to go down? Is this going to affect my mortgage rate? Does it make sense to wait until after this meeting to lock? And the answer is simply no. When the Fed cuts rates or raises rates, it typically doesn't have much of an effect on mortgage rates. And here's why. When the rate that the Fed influences is a very, very short-term rate. It's called the interbank offered rate, which is the rate that banks use to lend money to each other overnight. So it's a very, very short-term rate. And mortgage rates, like a 30-year fixed mortgage, for example, is tied to a very, very long-term bond, a 30-year mortgage bond, a 30-year security. So these are very, very different investments, and they behave differently in the marketplace. It's interesting because mortgage rates have come down by approximately 0.75% over the past 6 months, but the Fed hasn't cut anything. So that just shows that historically there's not necessarily a correlation. In fact, the Fed hasn't done anything here over the past 4 weeks. They just telegraphed the fact that they are likely to cut rates at the last meeting, and mortgage rates went down just with them saying it. And the reason why is market perception. A lot of times perception is what drives mortgage rates more so than what the Fed actually does. The perception is, if the Fed is going to cut rates, that they're concerned about the economy, because when the Fed cuts rates, it's a stimulus to the economy. So what that said to the markets is that the Fed's concerned, and that caused mortgage rates to go down correspondingly, because mortgage rates tend to go down when the economy is not as good. So that's why we've seen lower mortgage rates recently. We'll see what the Fed does this week, but that's a little bit about how Fed rate cuts affect mortgage rates or don't affect mortgage rates. So I hope that helps you guys out. Give me a call if you have any questions, or if you want to take a look at where we are right now on rates, see if it makes sense to lock, or if you have any questions on pre-approval or loan options, we are here for you. My name is RJ Baxter, Fairway Independent Mortgage. Have a great day.